Why is bookkeeping so important for taxes? Well, as the accountant, when I am preparing a tax return, I use the numbers directly from the profit and loss statement and balance sheet. And your profit and loss statement and balance sheet are reports directly pulled from your books. They're like the consequence of how things are entered. The financial statements are just the natural consequence of that entry. So if your bookkeeping is inaccurate, the numbers on your financial statements are going to be inaccurate. And I would say in my experience for almost 2 decades at this point, usually if financial statements are inaccurate, if your bookkeeping is inaccurate, you end up overpaying in taxes, which is really bad. We want you to keep the money. The government has not proven to be very good at spending your money. We think the world's a better place if you keep it and you decide how it should be spent. But on the flip side, underpaying, while it sounds like a happy accident, also isn't great, because then if the IRS comes and asks for your statements because they're going to audit you, not only will you owe the tax that you underpaid, they're also going to charge you a hefty interest and penalty on top of that. So that's money that could have been avoided had your books been accurate. And depending on how bad or inaccurate your financial statements are, the IRS is also going to then open up previous years and try to find more money to steal from you that way. So inaccurate bookkeeping, underpaying is bad, overpaying taxes is bad. Have accurate bookkeeping so that you're paying the right amount. It also actually helps with doing good tax strategy, because then we see a clear picture of what strategies may be an option based on having accurate books. It's also critical as far as inaccuracy or accuracy. You got to make sure your categories are classified the right way. Now this is a little accounting jargon-ish, I apologize, but you could accidentally choose a category that puts that expense, or what should be an expense, on your balance sheet, not giving you a tax deduction based on the way the financial statements are used on your tax return. Again, ending up in an overpayment. So classifying your transactions the right way. Look, one of the things, it's not something that's very popular, but I'm sorry, this is the truth. When you have your own business, whether that's as an independent contractor or as a business owner trying to grow something, regardless, anywhere on that spectrum, you have made a commitment as part of being that business owner to have accurate books. This has just been about why they're important to taxes, but they're also helpful in allowing you to make better business decisions. So there's tremendous value across the board in having accurate financial statements, because if they're not, that's where the numbers get pulled from for the tax return. You end up overpaying usually, but underpaying gives you some unpleasant risk as well. So to help you improve on your bookkeeping skills, we do have an in-depth walkthrough video on using QuickBooks to do your monthly bookkeeping. The link is in the description. Please watch it, and be sure to like and subscribe so that you get all of our new content. And our goal is to share all this information with as many people as possible. So if you are feeling generous, please share this video with others as well.